Hi, this is Cary with Wicked Signal, bringing you another video analysis. This one on the Trade Desk Incorporated, symbol TTD. You're looking at a weekly bar chart right now of TTD, or the Trade Desk, which I'll be using throughout the video presentation. You're looking at the full extent of the life, at least the publicly traded life of this stock since its IPO in 2016. If you don't know about the Trade Desk Incorporated, I can tell you, that they are, according to Wikipedia, they're a global technology company that markets a software platform used by digital ad buyers to purchase data-driven digital advertising campaigns across various ad formats and devices. Motley Fool has it as a long-term buy recommendation a number of times. Most recently, they resubmitted this as a long-term buy recommendation. We offer two distinct subscription choices: basic membership, which is free and always will be, and provides one free stock market analysis video every week. Filling out the membership form within the basic area will allow us to prompt you by email each and every time a new video is ready for your viewing. The second subscription choice is a premium membership, which costs $24.95 a month and provides two or more market analysis videos every week. Over the coming weeks, we intend to ramp that up to provide at least 3 new market videos every week. Included in the premium membership will be a growing catalog of video resources to include important trading and investing topics like effectively managing your own portfolio, effectively managing trading risk, effective trade execution correlated with your risk management strategy, technical analysis tips and techniques, so forth and so on. Clicking on the premium membership link will allow you to access our safe and secure payment gateway and make credit or debit card payment. Your subscription fee automatically transacted on a monthly basis. Subscription cancellation is allowed at any time. So please pass the good word. Tell your trader and investor friends about wickedsignal.com, and if you haven't done so already, at least sign up for the basic free membership, for you then be notified by email each and every time a new video is ready for viewing. We'll never share your personal contact information with anyone outside the Wicked Signal organization. If you go to the website, there's not much to say other than advertising, commentary. The last paragraph here on the About page, our founders set out to create something different, an independent media buying platform focused solely on the buy side, one that puts the success of our clients first, empowering advertisers with data, transparency, and precision to reach the right audience anywhere. If you take a look at the chart, you can see that this stock, after reaching a high of 972.80 in December of 20, has given much of it back, 30-40% back. It's come off the lows from March of 21. Much of that descent was sort of announcements by both Apple and Google, or Alphabet, in how they calibrate the buy side for advertising. Buyers are getting away from cookies, keeping customer data on file, and more toward other technologies. And so the Trade Desk was sort of behind the curve on that, but they're regrouping and recalibrating their technology so that it's more in line with that long-term likelihood that that Apple and Google will both be employing in the years to come. So that's a whole nother can of worms that I'm not going to get into. I do take a look at different buy recommendations on the internet, and this is one of them. And I'm just going to give you my 2 cents. After the big fall down to 561.02 in March of 21, the market has recovered some. If I take a look at the history of this stock, and I wasn't watching it at the time, but I could see that according to my analysis, I would have had a nice buy signal in June of 2020. Obviously, I would not have known the stock would have continued from the 300s into the 900s within a matter of a year, but that is what has happened, and it's given much of it back, 30-40% back in the last 3 or 4 months, as you can see. Now, this channel top, though, I think is worth mentioning. I'll come back to it later in the video. It's at 377.90 the week of April 12th and rises to 381.5 the week of May 10th. These are 4 full weeks apart. You can subtract them out, divide by 4, and you'll know exactly where that former channel top is each and every week in between. You can even forecast into later year if you like. It is a floor of support. I don't know if we'll test it or not. I'll give the indication of that in a few moments. But just to keep that in your memory bank there in terms of where we might find long-term price support. I'm going to zoom in a bit. Just in the last couple of years, going back to April of 2019, just to expand the chart so we can take a look at some stuff that's going on near term. And so what I'm seeing is that this stock is worth buying if it can close above this descending channel top. This is a classic channel top coming off the high from 2020. You've got a couple of lows, and the intermediate highs projected off that same rate of descent is at 747.07 this week, the week of Monday, April 12th, and that drops 4 full weeks later to 658.37 the week of Monday, May 10th. You can subtract them out, divide by 4, and you'll know where that channel top is each and every week in between. So if you are into selling stocks, buying puts, selling calls, if you play that aggressively, this is an area to do that, because this is an area that can contain buying, in my opinion, through May trade. And from here, this stock can fall back to not only retesting those lows, from last March of 561.02, but even perhaps continuing all the way back to that former channel top that I showed you a moment ago in the upper 300s. But we're not there yet. And in fact, given the buy recommendation on this and the fact that the balance sheet is in very great shape, the CEO is a very aggressive CEO, this stock has every chance of going up and continuing up into later year. But I don't have an indication of that, and I don't have a buy recommendation on that unless we close above the 747.07 descending channel top by at least a 1% margin. And that would be this week, for instance. The math is simple. You just take 1% of 747.07, add to it, and you have 754.54, which is the price that I would need to see the stock settle this week at or above in order to set off what I would consider to be a reliable buy signal, not only into May activity, but even into later year. I'm going to give you two targets. One is the quick short-term target, the quick pop to the upside, and the other is the potential longer-term objective if we settle. So the first is the quick pop, and this would be worth a 1 to 3 weeks, I would say. If we close above 747.02, and you can ride the stock up into the 840s, 860s, that 865.18 formation. Once again, you can subtract them out, divide by 4, and you'll know where that short-term channel top is each and every week in between. This would represent about a 10 to 15% gain on the stock if you were able to ride it up and buy it, say, in the 750s and sell it in the 850s, for instance, about a 10 to 15% gain. And this is an area, this short-term channel top is one where we could top out on a monthly basis, perhaps fall back to that 747.02 channel top. But I think that if we close above 747.02, you should allow for the possibility of outright longer-term bullish continuation into the 1107.65 area or wherever that long-term channel top is at that time. And how long could that take? That could be a 6-month move, for instance. Could take a little longer, but I think 6 months is likely. I will say this, I'm continuing to illustrate that intermediate channel top at 835.09 because I think that is the accelerator. In other words, while I do think that closing above 747.02 by at least a 1% margin is a viable long-term buy signal that could yield the 1100 and change area over the following 6 months or so, you could certainly wait, for instance, until we settle above 835.09, and that would still be a nice 50% move, or roughly, maybe not 50, maybe a 30% move, because this stock should then accelerate to the upside if we close above that 835.09 channel top, and I gave you those numbers a few slides ago. So bottom line here, closing above 747.02 by at least a 1% margin does allow the 1100, 1200 handle, if you will, over the next 6 months. But I won't fault you if you wait for a settlement above 835.09 or wherever that formation is at that time, because I think at that point in time, closing above that should accelerate bullish momentum, and I wouldn't be surprised to then see that 1107.65 channel top in as little as 3 to 5 weeks, perhaps, where I might add this stock, the Trade Desk Incorporated, could top out on an annual basis. So all of this is a scenario that can unfold if we close above the 747.02 channel top. But if we hold below that channel top, we can quite easily fall back to this simple trend line that held the lows a few weeks ago. And it comes in this week at 607.97, rises to 641.68 the week of Monday, May 10th. You can subtract them out, divide by 4, and you'll know where that trend line is in perpetuity. And that is a trend line, by the way. I'm not big on trend lines in terms of buying dips aggressively down to them because, the next test may actually be a violation. And that's really the reason why I'm showing this, because I think that while holding below 647.02 allows 607.97, there's also every reason to believe that holding below 747.02 allows longer-term bearish continuation, possibly all the way back to that channel top I showed you earlier at 377.9 to 381.5, depending on where we are. So keep that in mind, that this descent, this fall off of prices from 30 to 40% from when was that? That was, sorry, I forget. It was December, just last December, 4 or 5 months ago, that the big sell-off from the December high of 972.80 may yet to be complete. And that holding below 747.02 will keep that move intact. And we can continue further south all the way back into the upper 300s. Our signal for that would be a settlement at the end of any week below the 607.97 trend line. I think that's really all that needs to be said. I'll just leave you, with this image, 747.02, primary long-term resistance, below which this stock continues to show weakness into later Q2, and above which shows strength into later year. That strength decidedly accelerated following a weekly settlement above 835.09. And that is all I have to say for this particular Wicked Signal video on the Trade Desk Incorporated.